Good morning, everybody. This is the live market open for Tuesday. It's March 8th, International Women's Day. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. We seem to have some kind of an issue with the normal chat box, so I hope it'll be resolved. In the meantime, I'll try to look at the comments under the YouTube video. Okay. So we'll talk as usual about recent developments in markets, various charts and levels, the next 24 hours, and of course your questions. Hopefully the alternative chat will work, or the normal chat more hopefully will return to normal. Okay, as usual, we'll begin with the market mood. So the market mood is a story of 2 days, if you want it. Yesterday was quite positive. Let's begin with yesterday. It all looked good. Iron ore prices leaped at one point almost 20%. Good news, more demand for commodities, more investment, more economic activity all over the world. Same with oil prices. They continued advancing with Brent crude topping $40 and WTI crude oil also continuing the upwards trajectory. We'll show the chart of WTI soon. We had two comments from Fed members. One is Stanley Fischer, which leans to the hawkish side, and he sees rising inflation. So no big surprises from him because we knew he was hawkish. And Lyle Brainard, which is dovish, and she saw more headwinds. So basically, it was, let's say, 1-1, a draw between both central bankers, one of them leaning to the dovish side, the other to the hawkish side. No surprises also in their positions, okay? Michael Bloomberg, the founder, president, major stakeholder of Bloomberg, and also former mayor of the city of New York, announced he will not run for president, as it will make things more complicated and take the decision away from the people of America to Congress or to the Electoral College. Anyway, he had some explanation. He did criticize Donald Trump and Ted Cruz, though, without supporting any of the Democrats. Anyway, that makes the race, of course, less complicated. There was a slim chance that he would join. Anyway, he's not in there. This is sort of a side story. The big stories are, of course, commodities and expectations for the Fed. But things changed a bit. Things changed a bit overnight. We had Chinese trade balance coming out. It came out with bad figures. Okay, so Chinese exports fell 25%. Okay, in February. This was much worse than expected. Let's look at the FX Street calendar on Forex Crunch right here. Enlarge this a bit. You can see that the Chinese trade numbers are all in the red. Okay, most important one is. The one that stood out most is the collapse of 25.4% in exports year over year. That's huge. Double the expectations of 12.5% and worse than 11.2% last time. Now, we all know that China celebrated the new year and the beginning of February, and it always skews the data, but always makes things a bit more complicated to read around February. But also in January, they fell quite a lot. So it should have been balanced. So even if you take these 2 months together, it just doesn't look good. Okay, less exports, perhaps more internal demand. This of course had an impact on the trade balance, which was much weaker because we had less exports than expected. So only $32 billion instead of $50 billion. But also imports. Which is, of course, more critical for Australia. They dropped also more than expected. They were expected to fall by 10%, and they fell nearly 14%. So it's also bad news because if we just talked about how iron prices were on the rise yesterday, this is, of course, bad news because China imports less iron and less coal and less investment in general. What China did import more, actually even on a record, was oil. Okay, so I didn't write it in the comments, but yeah, I did. Here we go. They did import more oil than expected, so this provides some kind of silver lining, if you wish, a glimmer of hope that oil prices will continue rising. But the mood this morning remains negative. So if yesterday I was talking only about a small correction within the general risk appetite, this morning the news from China, despite the silver lining in oil prices, is just bad news for the global economy. And what else do we have in the past 24 hours? We had in the Eurozone Centix investor confidence fall, worse than expected 5.5. Something I didn't write here is that Germany's industrial output released just over an hour ago came out better than expected. So it's sort of the past 24 hours, you can see that we have balanced figures in the Eurozone. Japanese GDP beat with the final read of falling only 0.3 instead of 0.4. So far, it didn't have a material impact on the yen. The yen moves more by the mood. When we had more safe haven flows, it strengthened. Okay, and we talked about Chinese trade balance. Let's look at the charts. Okay, I'm trying to refresh the chat. I see it doesn't work. I'll take a look and see if we have comments under the YouTube video. No, I don't see any comments here. And I might see myself speaking to myself under the YouTube video. Anyway, I hope the chat will come up from the dead. Anyway, let's talk about euro dollar. Currently, let's see, we talked about resistance at 110.70, but currently we're at the same level seen earlier this week. Sorry, on Friday, just after the non-farm payrolls, around 110.40. This could turn into a double top, but I still see 110.70 as resistance. Okay, what did we have yesterday? We had it fall very nicely to 109, to the round number of 109. Well, sorry, that was the NFP again. We had it battle 109.60, which is losing its shine as some kind of support. And then it went up again. Euro dollar basically in range, basically waiting for Draghi. We had lots of analysts releasing their statements. I have a page on Forex Crunch where I concentrated all the related articles to the ECB, so you can dive into all the information, all the expectations, the negative deposit rate cut, the QE, the other measures, the reaction for the euro, what's priced in, what's not. Of course, we'll talk about that perhaps further on today as well. We talked about it yesterday, and of course, on Thursday, we'll do a very long preview. Anyway, euro dollar basically in the same, well, higher in the range, did find some kind of a bottom here. Last week, it traded on lower ground, but I can't say that it has totally changed direction. I would say it's in a wait and see mode, okay? The better than expected German figures this morning were helpful. Okay, let's just look at those figures. So I'm not talking the air. Industrial output, yeah, it advanced 2.2% year over year, expected to fall 1.6. This data series, like its factory orders, is quite, it fluctuates quite a lot. So it's not that important, but it's still good news from the most important sector from the biggest country. Okay, let's move to pound dollar. Also here, we had the better mood yesterday. So we had the pair making a clear break above 142.30. Look how nice this line works. Yeah, so we're currently at 142.50. A slight drop this morning. We were already getting closer to 143 yesterday. Today's big event for the pound is a testimony by Mark Carney. Mark Carney, the governor of the Bank of England, Canadian, will be testifying at 9:15 GMT. And the main topic is the Brexit. It'll be very hard for Mark Carney, which is a civil servant and not even a British citizen, well, subject of Her Majesty Queen Elizabeth, but still not a Brit, to talk about, on one hand, the economic implications without sounding political. Now, we know that most of the business community in the UK supports staying in. it's not 90%, but there's a clear majority. And I think also the governor of the BOE prefers them to stay in, prefers less uncertainty. But he'll have to refrain from saying something too political because he's a civil servant. So he'll be tiptoeing, on one hand, talking about the implications, he wants perhaps to assist the government. But on the other hand, he'll have to be very careful. I think it'll be complicated for him. And of course, it's not only a statement that he releases, which he can prepare ahead of time, but he will release a statement, but he will also ask questions. And British politicians and the British press have a tendency to ask tough questions. So let's see how he fares that. That's at 9:15 GMT, 10:15 Central European time, just after the show. So that's sort of the main event for the morning, because we don't have too many critical events today. Okay, so that's what we have on the agenda. Talking about pound dollar. Anyway, the lines to the upside only at 143.60, a line that we haven't seen since since Boris Johnson said that he supports a Brexit. So that's way back. That's in the middle of February. We're already close to the middle of March, so that's about 3 weeks ago. Okay, let's continue to dollar yen. The yen did strengthen, especially overnight when the mood worsened over China. Okay, currently on lower ground, it broke out of the range. Extremely choppy trading in dollar yen. Perhaps we can mark some kind of a bottom here at 112.80, but it's really, really choppy out there. The yen did enjoy safe haven flows, basically ignoring Japanese GDP, so it moves more on moving more because of Chinese data than because of due to Japanese data. Let's see if I can revive, see what's going on with the chat here. Oh, can't see it so far. Anyway, I hope it'll come back, and I'm sure tomorrow it'll be back anyway. So regarding the Japanese yen, currently just around the very round number of 113, support 112.80, but should be taken with a grain of salt. Perhaps more significant support right here at 112.20. Very choppy trading over there. Let's continue. Dollar CAD. It continued its journey south, the strengthening of the Canadian dollar thanks to rising oil prices. We'll jump to oil prices quite soon. We fell under 133. The new low seen yesterday, 132.60. And now that the mood has worsened, we had the pair bounce back to the previous range. So the current range is 133 to 133.70. Okay, because of China, always easy target to blame. Anyway, the Canadian dollar is off the highs. Dollar CAD is off the lows. Oil prices. So this is sort of the big event that we had. Finally, we had a breakout in oil prices. Yesterday, we reached even higher levels, crossed the 38 level. First time, actually, I think this year. Let's zoom out just a bit. Yeah, okay. Last time we've seen these levels. We had the pair struggling. Had the oil prices struggling to recapture it just around the turn of the year. They made an attempt to break higher ground, really towards 40 was seen only in early December. Okay, so we've made a move up, but now with the worse market mood because of China, we're a bit to the downside at 37.60, 37.87. The line I marked here worked very nicely as support because it was the low seen back in August. I think it's a bit less relevant now. It was very relevant on the way down early in January. Anyway, the high seen yesterday around 38.10 on WTI crude oil. Currently, we're a bit lower. I would say that some kind of weak support is here at $36 because it's a round number. Anyway, WTI crude oil is sort of reflecting the general mood in markets. Okay. All right, let's continue with the Aussie dollar. Of course, when we talk about the Australian dollar, we had an excellent week last week. It had strong GDP, trade balance, other figures. China supported markets with the reserve requirement ratio cut, but we continued this rally all the way here. Got close to the round number of 75, but I must say the mood worsened even before for the Australian dollar. Things became worse even before China released the trade balance figures and the Aussie began sliding. When the data was actually released, the fall intensified. We made a break beforehand above the 74.40 level, and now we're back at this level. The range that I see at the moment is 73.75 to 74.40. Okay, so the Australian dollar still looks strong. This looks to me like a correction. There are good reasons to like the Australian dollar. We had a release, for example, of positive consumer confidence, not a first-year figure, but still good news. And in general, the Australian economy is doing well and reacting a bit less to China. Doesn't mean it's ignoring China. As you can see, it did fall. But if we look at the bigger scheme of things, the Australian dollar is still, it had an excellent week last week. It had a good day yesterday. And today's slide, because of China, 40 pips at the moment is not devastating. The Australian dollar still looks strong. Kiwi dollar, here we're struggling. Let's recalibrate those lines. 68.20 is resistance. We've seen that on the non-farm payrolls on Friday and also yesterday. Of course, currently worse market mood. We're down at 67.66. I would say 67.40 still works as support, followed by the round number of 67. High resistance is at 69. Dollar Swiss, we're seeing here a weakening of the US dollar against the euro, weakening of the US dollar in general, 99.20 at the moment. The line of parity still works as some kind of resistance, followed by 140 and support at 99 cents, followed by 98.50 and 98.20. Euro Swiss higher off the lows, didn't fall below 108, and currently it's trading in a high range between sort of, I would say, 109.80, 110 are levels to watch to the top side. To the downside, we have 109. Okay, euro pound, the old line of 77.40 is currently challenged. It's not as strong as it used to be. We reached a high of 79.20. Since then we fell, but currently we found some stability in the euro versus the pound. Some kind of support at 76.60. It's hard to say that there's a clear range there. Of course, the next big event is today's testimony by Mark Carney, although he'll probably try not to say anything meaningful. And the big event for this pair is, of course, the ECB decision on Thursday. I believe that until then we'll have more choppy trading in no clear direction. Euro yen used to be the safe haven pair. The euro is less of a safe haven, but still safer than commodity currencies, let's put it this way. Reached a high of 125.50, currently back to some kind of lower range. 124.20 works nicely as support. Further support at 123, resistance at 127. Okay, and the dragon pound yen currently at just under 161. 160 works very nicely as support, followed by 158.50. Resistance remains at 163.80. The range here is relatively narrower than what we got used to. 162.30 works as resistance. A relatively more narrow range, but I'm not sure it will last. Of course, if the mood worsens, the yen strengthens. The mood improves, the yen weakens, and the pound awaits new polls and Mark Carney, everything Brexit related. Okay. We talked about oil. We talked about, well, unfortunately, the chat still doesn't work. And don't think we have an alternative at the moment. Yeah. So I'll just keep on talking. We have other things to cover. Don't worry. I have lots to say. I hope it'll be of interest. Must say, of course, I like it more when we have questions. It's the live part of the show. But anyway, 9:15 Mark Carney talks about Brexit. We talked about that. That's sort of the main topic of his testimony. He might be asked to force other things about the economy. Nothing else of significance in the European morning today. About 1:30 for those of you trading the Canadian dollar. We have building permits in Canada. So yeah, we had industrial output here. This is marked as important, the GDP in Europe, but I must say there's 99% chance that these are the final figures, that the final figures will just confirm the initial one's growth rate of 0.3 quarter-over-quarter and 1.5 year-over-year. That's what's expected. It's very rare to see differences here. Okay, before the Canadian figure, we have at 11 GMT, we have the NFIB business optimism from the United States. This is the third tier figure, right? Housing starts in Canada is meaningful. This already is important for the Canadian dollar, not of course beyond the borders of Canada. 180,000 is expected, higher than 166,000. But it's, yeah, why is this fall expected? Okay, it's a yearly figure. Anyway, yeah, and then we have, well, another second tier figure, the IBD TIPP economic optimism for the United States. Last time it was 47.8. I don't have an estimate now. What we do have of interest is Australian consumer sentiment at 11:30. Yeah, the Westpac Consumer Confidence Index stood at 101.3. Let's see what happens now. And yeah, and how much it changes. No estimations here for those who are trading at night, trading the Australian dollar. This is of importance. So today, sort of the main thing that has an impact today on markets is what we had overnight. China. I think it could keep the mood a bit damp during the European morning and perhaps also during the US session. It's sort of a day to digest the Chinese data. And before we have two rate decisions tomorrow from other commodity currencies from Canada and New Zealand, and of course the Draghi show on Thursday. We didn't have any new leaks towards the ECB press conference, as we have some time now and no questions, of course, due to the technical issues. Let's talk a bit more about the ECB's possibilities. The ECB can do, basically what we're looking at is two tools. One is the negative deposit rate, to cut it. That's almost uncertainty. And the second thing is the level of QE. Let's begin with the negative deposit rate. Anything under a cut of 10 basis points would be a total shocker and will send the euro shooting higher, okay? This is the minimum of the minimum. Analysts, I read quite a few pieces yesterday and published a few also on Forex Crunch, expect between 10 basis points to even 30 basis points, okay? So currently we're at negative 30 basis points, minus 0.30. We're expecting the cut to at least minus 0.40, minus 40 basis points, but also minus 50 basis points is normal. I only saw one one analyst saying that he expects 30 basis points cut. Of course, 30 is the extreme. 30, a cut from minus 30 to minus 60 would kill the euro. I don't think they'll do it because it's a big jump and they'll want to leave some tools in the shed. But I believe that 20 basis points is realistic, okay? The second tool that they have is the level of QE. They already pledged to reinvest proceeds like they do in the United States. That means for every bond that matures, they buy another bond. Okay, that means they'll always keep a high level of their balance sheet. They always keep a lot of money in circulation. And they already extended it from originally September 2016 to March 2017. Okay, so what they didn't do is expand the monthly buys of QE. So this wasn't changed since the inception 1 year ago. Actually, they announced it in January 2015, began doing it successfully in March 2015 as well, 1 year ago, and it stands at 60 billion a month. Now also expectations stand on between plus 10 billion to 70 billion a month, all the way to even 90 billion, 30 billion more. Okay. Now many say that they don't have anything to buy anymore, because I mean they can announce that they enlarge the monthly buys, but what will they buy? The ECB currently has a limit of buying bonds with yields that the minimum yield is the negative deposit rate. That means minus 30 basis points. But if they change the negative deposit rate to minus 40, 50, or 60 basis points, they have more bonds eligible for buying. Okay, so it means in this case many German bonds, the biggest country, and it has already many bond yields in negative territory. So that's another way that they can do. So lowering the negative deposit rate and buying more bonds every month. Okay, these are the two main things. They can also extend the QE program from March 2017 to a later date in 2017, 2018, or just say we're doing it indefinitely, no limits. We'll tell you when we want to finish this program, forever, basically. Q infinity, as some said about the Fed's program, similar program. What they could also do is, these are more sort of detailed and small steps, make it a two-tiered system regarding the negative deposit rates, or three-tiered, have some exemptions, have some, well, other details of what things they will buy, but basically the two things will move the market. The amount of monthly buys should rise from 60 billion, but it's uncertain if it'll rise. And the negative deposit rate, which at a minimum will drop to minus 40 basis points. So these are the two things to watch. I'll just say that it's on Thursday at 12:45 GMT. And this is when they'll announce only the interest rate change, okay? Usually when they do a change in QE, they say already in the statement at 1:45 GMT, listen, this is the new rate, or no new rate, but we're going to announce something in the press conference. Big news is coming. If they do that, we'll know that more QE is coming already 45 minutes before Draghi speaks. Draghi begins speaking at 1:30 GMT, and that's when this new QE, expansion of QE, is expected. Okay, this is a big event for euro dollar, for euro pound, for euro yen, for everything. So this is, I think, already the second preview I'm doing. Well, as we have technical issues with the chat, but of course, I'm sure I'll talk about that also tomorrow, and of course on Thursday. All right. Anyway, yeah, chat unfortunately still plays games. So that's a long preview for the ECB. But of course, if we already talk about the ECB, we should talk about euro dollar and the ranges. So, okay, currently coming a bit off the highs, still above 110. 110.70 is still a level I see as resistance. Higher above 112.50, not that strong, and really strong resistance, 113.75, not only because it was resistance here in February, okay, the highest level of the year, but also because it worked as a line of resistance back in November 2003. Yes, nearly 13 years ago, over 12 years ago. And it also worked during the fall, during 2015, during last year. Okay, so this is a very strong line of resistance. Higher above, we have 114.60, which was the first post QE recovery here for the euro. Worked once again as resistance, and 117.12, of course, the high level of 2015, around the crash of the Chinese stock market. On the downside, we have immediate levels. Let's go back to the daily chart, to the hourly chart. Sorry, we have 109, 108.20, 107.70, and 107.10, which was strong support earlier this year. Back to the daily chart. Okay, 107.10, 107.10. Here we had the drug-infused leap when in December he didn't deliver as expected. The low since then has been 107.10. Below 107.10, real support, I would say, only at 105.20, which was the low level in December, just before Draghi. Sorry, 105.30. Yeah, also important level earlier in 2015. And below that line, we have 104.60. Indeed, exactly 1,000 pips below the high seen afterwards. Anyway, this is the lowest level since 2003. And that's the low level. Will we see extreme moves in euro dollar? I'm not so sure. I do hope so. The markets do expect Draghi to do something. We know that the Bundesbank is on board for more action, but probably not without limits. We also know that the ECB said, that Draghi said, that the Bundesbank said that they do expect the governments to do lots more. When the Germans say they mean more structural reform, Draghi means also more fiscal stimulus. Of course, he also supports reform. And central banks cannot do anything. We heard from the German finance minister, Wolfgang Schäuble, also saying that that central banks have limits. Okay. That's a very, very long sort of preview for the ECB. Let's talk about other events this week. So yesterday we had the echoes from the non-farm payrolls. Remember, non-farm payrolls came out better than expected on the headline. 242,000 jobs gained, 30,000 more in revisions. Unemployment rate remained at 4.9, but the participation rate advanced. Also good news, to 62.9. The real unemployment rate also fell to 9.7, but everything was marred, was sort of destroyed. The mood worsened because wages slipped 0.1%, and year over year they rose only 2.2. Very disappointing. Anyway, this keeps the US dollar weak, as we can see. But more jobs and less inflation pressures. This means that the Fed will not hike anytime soon. Let's also look at the rate hike expectations. If we already went there, this is the CME Group Fed Watch tool. As you can see, very round 100% against the rate hike in March. The meeting is a week from now, next Wednesday. Okay, if we move forward along the timeline, we can see that markets expect a rate hike. Bond markets, yeah, it changes all the time, of course. Only in November 2nd, I can guarantee that we will have no rate hike on that date, because it's just a few days before the elections in the United States. So forget about that. But we might, if things really improve, we could have maybe in June rate hike, but more likely we'll have rate hike only after the elections, either December or next year. Okay. Anyway, we had NFP echoes. This is still meaningful, especially as we don't have any more. Well, today we don't have any important US figures. We had Japanese final GDP, not a big event. Chinese trade balance was a big event. I think it'll continue impacting the mood today. Tomorrow, rate decisions in Canada and in New Zealand. Okay, no changes are expected, but these central banks have surprised in the past, so you never know. If we continue forward on Thursday, it's of course Draghi Day, D-Day, the Draghi drama, the Draghi drag show, and whatever headline you wish. We also have Chinese inflation. You can also try to steal the show. And on Friday, we have the Canadian jobs report. Of course, important for Canada. And the last word comes from the University of Michigan. Reuters survey, the consumer sentiment survey for the month of March. And this could be interesting as well. Finally, an important US figure this week. Of course, last week we had hugely important US figures, and next week we have the Fed decision. This is sort of a week off from key US indicators. Doesn't mean, of course, the US is not important and not closely watched. Okay. We also have today further more primaries in the United States. Michigan is voting today. Let me just check out the calendar. This type for me. Anyway. Here we go. Let's look at what we're expecting today in the United States. It's not as important as what we have next week, but March 8th is today, the International Women's Day. So we have Puerto Rico. No, sorry, you have Hawaii in the Republican Party. Not so big. Idaho in the Republican Party. Michigan is the most important state today. Very industrial state, especially for the Democratic Party. It's more or less head-to-head there between Sanders and Clinton. And we also have Mississippi in both parties, a smaller state. So these are sort of so 4 elections in the Republican Party, 2 in the Democratic Party. The bigger events come on next Tuesday when we have Florida for the Republican Party. It's a winner take it all. Same thing goes for Missouri, and and we have Illinois voting, and Ohio also there. So next Tuesday is another sort of Super Tuesday. Today we also have elections in Michigan, but not as important. Okay. Try to refresh the chat and see if it works. No luck. I don't see that happening. So let's get to the wrap up for today. This is the wrap up for the live market open for Tuesday, March 8th. It's International Women's Day. The biggest development in markets this morning is the disappointing Chinese trade balance. A collapse in exports, 25%, double the expectations. You can blame the Chinese New Year in February. This is the report for February, but it's not only that. Also, imports fell. January was not much better. Perhaps in March we'll have a bounce, but it doesn't look good. This ruins the otherwise good market mood that we had yesterday. Yesterday we had iron prices leaping almost 20%, oil prices continuing the rise with Brent over $40 and WTI above 38. From the Fed, we had 2 speakers. Fisher, the hawk, was hawkish, and Brainerd, the dove, was dovish, so no surprises over there. We have other figures, mixed European figures. On one hand, the European Eurozone sentiment missed with only 5.5 points, but this morning, German industrial output beat expectations. Japanese GDP also came out a bit better than expected with a fall of 0.3 instead of 0.4. This is the final figure, so not that critical. Again, the big event was the Chinese trade balance having a big impact on markets. Looking at the charts, beginning from euro-dollar as usual, we had a recovery yesterday, some kind of fall today. Lines to watch are 110.70. I still see that. Also 140 perhaps is becoming important. On the upside 112.50, and the downside 109.60 perhaps, providing some support. Yeah, there are lots of tension towards the ECB rate decision on Thursday. Pound dollar, the big event for the morning. Mark Carney, the governor of the Bank of England, testifies around the implications of British exit of the European Union and its implications on the British economy. He'll do some tiptoeing work trying to stay away from politics. I think it's almost impossible that his words will not have any political influence. Anyway, we had a break higher when the mood was better yesterday, above 142.30. So far, cable is holding above this level. It's awaiting Carney. Further support 141.25, resistance 143. Dollar yen, worse mood in markets this morning because of China, less because of the Japanese figures. Sends safe haven flows to the Japanese yen. Some support at 112.80, resistance, well, weak resistance at 114. Very, very choppy trading there. Much more predictable trading with the Canadian dollar, moving alongside the moves in oil prices. Yesterday we fell to a new low around 132.60, but we are back above 133. 133.70 works as resistance, followed by 134.60. Oil prices are back down, or off the boil if you wish. Today we have Canadian housing data that will impact the loonie. Australian dollar is doing the necessary correction after a big rally that began last week. We got close to 75. The fall, I must say, began before the release of the Chinese trade data. A correction was probably necessary here. 74.40, look how nicely it works as resistance, followed by 75. 73.75 is support to the downside. Kiwi dollar also off the boil. 68.20 is resistance. 67.40 is support. Nothing meaningful from New Zealand today, but tomorrow we have a rate decision from New Zealand. We'll do a preview for that tomorrow. Okay, so these are currencies. We already talked about some events for this morning. Carney talks about Brexit, 9:15 GMT, 1:30 GMT Canadian building permits, Australian consumer sentiment at 11:30, and then Australian home loans. The big event for today is the speech by Mark Carney and the echoes of the weak Chinese trade balance, especially the collapse in exports, is the talk of the day. But of course, ongoing tension towards Draghi, ongoing tension towards the EU referendum, all of these events are important. Okay, so that's it for today. I wish everybody that is watching, I must say I don't know who is watching because the chat isn't working. Sorry for the problems with the chat. I believe everything will be all right tomorrow. It's usually quite stable. So thanks everybody for watching. Wish everybody a safe and successful trading day. And we'll be here tomorrow. Let's see what markets bring us. Okay, so that's it for today. See you. Thank you, and bye-bye.